The news day continues here on One News Now Business. I'm Jess De Los Santos, and here are the biggest stories on the economic and corporate fronts. New vehicle sales in the country rose by 27.2% year-on-year in February. Vehicle sales reached nearly 31,000 units last month, higher than just 24,300 units sold a year earlier. That's according to the Chamber of Automotive Manufacturers of the Philippines and Truck Manufacturers Association. Commercial vehicle sales increased by 29%, accounting for around 76% of the industry's total sales. Campis said the positive sales growth indicates a continuously progressing auto industry. The country's trade deficit widened in January as exports fell further. Data from the Philippine Statistics Authority show that exports sank 13.5% in January, deeper than the 7.7% contraction recorded in December. On the other hand, imports rose 3.9% from the 9.6% contraction in December of last year. These figures brought the trade gap to nearly $5.74 billion, wider than the deficit of $4.5 billion in December. Analysts warn that further tightening by the U.S. Fed may put pressure on the peso and cause potential fund outflows in the coming months. U.S. Federal Reserve Chairman Jerome Powell earlier said the Fed would likely hike rates more than expected in next week's policy review to help curb inflation. This led market players to speculate that the terminal rate might peak at 6% this year. And while analysts agree that the peso has held up relatively well against a strong dollar, they say the BSP is still under some pressure to match the Fed's hawkish stance to help cushion the blow on the local currency. The Joint Foreign Chambers is urging Congress to pass an air transport reform bill after technical glitches caused the shutdown of Philippine airspace in January. Members of the chambers, together with other industry associations such as the Safe Travel Alliance, Air Carriers Association of the Philippines, and the International Air Transport Association, said they have long advocated for air transport reforms. The chambers made this statement after the Senate Committee on Public Services released its report on the air traffic management glitch that occurred on New Year's Day. The chamber said this incident, which led to cancellation of hundreds of flights, is a, quote, strong reminder of the need to pass laws to institute institutional reforms in air transport. The Senate committee recommended amendments to the Charter of the Civil Aviation Authority of the Philippines to strengthen the agency and to address its conflicting functions as a regulator, operator, and investigator. It also called for the creation of the Philippine Airports Authority and the Philippine Transportation Safety Board. We'll be back with more stories after the break. Keep it here on One News. And you're still watching One News Now. I'm Jess De Los Santos. Agricultural Group SINAG is urging the government to speed up the building of border control facilities in the country. Plans to put up the first 3 border control facilities in the Philippines have been in the pipeline since 2020. SINAG chairperson Rosendo So says he hopes the facilities could finally start operating this year. He adds that a more rigorous examination of agricultural products as the country's island borders will help curb the spread of diseases like the African swine fever. SOS says that although ASF cases in the country have become more manageable, some regions are still reporting increases in their ASF cases.
Ang ASF since 1923, nag-umpisa yan. We hope na pabilisan natin ang yung first border there na sinasabi natin para at least lahat na produkto, hindi lang etong ASF, yung bird flu, etong sakit na tumatama sa mga full armyworm, sa mga mais and mga sibuyas na pumapasok na sakit dito sa ating bansa, mapahinto natin.
The Securities and Exchange Commission has warned the public against putting money into investment-taking entities. These are SNC Shamay Cloverleaf Group of Companies and Camacho Trading. SNC Shamay is enticing the public to invest a minimum of 10,000 pesos, which is said to earn up to 25% in interest after a month. Meanwhile, Camacho Trading on its online post promises investors at least 10% return on investment per month. The SEC said both entities have not secured their licenses to offer shares. Senator J.V. Ejercito raised concerns about the newly signed Memorandum of Understanding between the NGCP and the National Intelligence Coordinating Agency, or NICA. The lawmaker pointed out that the National Grid Corporation is 40% owned by the State Grid Corporation of China. Ejercito says there would be no issue if the Philippines is not embroiled in any dispute with China.
Kung wala tayong dispute with China, then I guess I will be comfortable. But with an ongoing dispute with China, and a Chinese entity owns 40% of the National Grid Corporation, it's indeed a cause for concern. Paano yan? Kung magkaroon tayo ng hindi pagkakaintindihan ng China, isang switch lang, pwede pala maparalyze ang buong Pilipinas because of NGCP.
The MOU between the NGCP and NICA is aimed at protecting the country's energy assets against cyber attacks. Under the agreement, NICA will recommend ways for the NGCP to safeguard its transmission assets. And no less than President Bongbong Marcos witnessed the signing of the deal in Malacanang yesterday.
Since NGCP is a critical part of our security, of our ability to continue to function as a society, then this is an important day, because now we have made more robust the defenses against any possible attacks on our power systems.
The collapse of Silicon Valley Bank is triggering a rapid recalculation on trading desks of how willing the U.S. Federal Reserve will be to keep tightening to tame inflation in the United States. Kathleen Hayes reports on Bloomberg TV.
All of this contagion fear really leading traders to reprice where the Fed goes from here. Kathleen, what are you seeing?
Well, we're hearing quite loudly from a lot of banks that when it comes to what SVB is doing, where it's pushing the Fed, it's pushing it to think less about more hikes and how big they are, and a lot more about the possibility of a pause, a possibility of a cut. We're seeing those lags, right? Monetary policy lags. Looks like they're catching up with banks. Maybe they didn't catch up with the job market yet, but they have caught up with banks, particularly banks like SVB, with so many risky assets on their books. Goldman Sachs, I think, making the easiest call. Their call is the Fed will pause, and then they will do another rate hike, and their terminal rate will be somewhere around 5.25%. Nomura, that's the big star of the day, with their call not only for a cut of 25 basis points, but also halting quantitative tightening for a while, because the Fed, they think, is going to look at the financial stability risk first and foremost, and they are going to say we better cut. Things are unstable. We need to put more liquidity in the system. I think the whole thing about ending quantitative tightening is that they're selling off bonds. I buy a bond, I give you my reserves, I give you the liquidity in the market. You need to keep the liquidity there. That seems to be maybe one of the most solid things they're saying. The cut is very speculative at this point. In terms of BlackRock, though, that's the other bold call, is that the Fed will actually go ahead and do a hike. They're pointing out a very key point, okay? 2008, all the monetary levers were being used to support the economy, and the Fed doesn't have to worry so much about shoring up the whole banking system as it did then. So that's why they have to focus on the 2% target, getting there, continuing to hike rates, bringing down inflation. And they're calling what we're seeing now financial cracks from the rapid Fed hikes. But it's not like 2008 when there were all the mortgage-backed securities that nobody even knew what they were pricing on their books. A very different situation. Now, also interesting, Larry Summers, former Treasury Secretary, Bloomberg opinion columnist, saying in an interview today with our own David Weston that a pause would actually be a mistake by the Fed. Let's listen.
My own judgment is that it would be a serious mistake for the Federal Reserve not to remain focused on its objective of containing inflation and bringing it down to the range of the 2% target, and that's probably going to require monetary policy to become more restrictive than it is right now.
Very important. Two things we're focused on, besides what's happening in the banking system with the bailout from the Treasury, with the Fed's new lending facility. We're looking at consumer prices tomorrow. More emphasis than ever on the February consumer prices, expected to come down on the headline from 6.4 to 6. On the core, 5.6 to 5.5, a little bit of improvement. A big move in either direction could be important for these very volatile markets. And also the European Central Bank meets this week. They've been pushing hard for a 50 basis point rate hike. No comments from the ECB yet. I think a lot of analysts and economists are saying that they don't have an impact like we're having in the U.S. They can go ahead and do 50, but it's another question for the markets as we go through the week.
And those are the top business stories of the hour. I'm Jess De Los Santos. Join us again at 2 p.m. We are One News, all sides, all the time.